All right, let's do this. It is Wednesday, February 18th, 2026. Um, this is the last chart I was staring at before I started this. I mean, look, Google's telling you something. In my view, that. Of course, the month isn't over. We still have what? Seven. We have 7 trading days left of February, so a lot can happen in 7 days. But I'm guessing we'll go down. But that's a bearish engulfing candle on Google. To me, that's telling me where the main market is heading into March, April. Yeah. Anyway, let's start from the beginning, shall we? Um, hmm. Let's highlight an hourly chart. Why not? So positive open as expected, up into 11 o'clock. Little chop, little chop, a little marginal new high, bearish engulfing candle, which played out into 2 o'clock. Closing out, saw a marginal afternoon low and closed up 68.81. I did a little trade today. I was short from around there and I got out about, I don't know, somewhere around there. So I didn't get out near the bottom, but there was a trade. There was a little trade there. And yeah, what is this? Um, what does this bode for Thursday? You think it's gonna be difficult to get above here? If we do, then you're looking at 69.30, 69.40. That looks difficult. I don't think we can do that. I mean, no, that's gonna be tough to do. We're gonna be prone to getting stuck either at that high, I mean, especially that high. I mean, look, wow, I mean, yeah, we can go up 20, 25, maybe 30 points and get stuck again, and then roll over into late Thursday. Yeah. There's a few tradable waves. I will say on a daily chart, we were higher for a third day, but look at this candle. We were spiky from the 10 MA and the 50 day. I guess you could even say the 20 day on there. But that's a little bit problematic for the bulls. Doesn't mean we can't open up tomorrow positive, but I could accept the fact that we have a swing lower and red gap is just begging to be filled. And the more bearish target for early March would be purple gap to around 6,600, which of course look at the 200 day. 200 day is coming up. We could test 200 day not next week, but the following week in early March. So hugely important. I mean, clearly the market's tired and it's a little bit spooked by war talk. All right, let's move on to some individual stocks. We're not even going to bother with the VIX. No need. Not much to say about Apple. I mean, we have a March 4th event, but do we really care? Not really. Archer, Agnico Eagle. Yesterday's candle, hollow red reversal, 3.6% played out. American Eagle, 0.5%, but this looks to me like it is a multi-week bear flag. I think this is going to come back to $20, which is 20% down. First Majestic Silver, which has earnings early Thursday, 4.9%. Earnings should come in fine. AMD down 1.5%. Concerns about competition from NVDA. Amazon second day higher. Yesterday's bullish engulfing candle played out. We have two big gaps. I mean, look, maybe we Actually, yeah, tomorrow I'd be looking for a stall around a 10 MA, 209, and then resume lower into March. Barrick, 3.4%. You can argue some kind of A wave down and all of this. Big bullish pennant. Question bearish pennant. In which case we'll come down to maybe 36. Now, except 36 is going to require the S&P somewhere south of 6,600 at minimum. But yeah, maybe we can buy this back at 36. I like the idea of buying Barrick. Barrick's a good miner. Boeing down 2%. That's not great. That's bearish for Thursday. Don't care about Baba. Caterpillar down 1.7%. You could argue that structure is a baby bull flag, but my concern would be the main market. Also, look, cyclically, we're on the crazy high side. We've been going up for a long while now. I mean, look at this. Look at how the 50-day holds. Isn't that incredible? I mean, it needs to, we're due some a couple of weeks of cooling, right? Momentum's going to be prone to turning negative on not tomorrow, but Friday. So Friday leans bearish for cat. Kamiko, 3%. Don't care. Lame. Coinbase, weak. Deckers, 1.3%. Disney, 1.6. I think yellow gap's got to be filled in March or April. ET, impressive. Oh, yeah, it's because of oil, right? Oil was up 65s. Freeport, 2.4%, but that is a black candle. Short-term bearish with the main market. Google, up 0.4. Yesterday's reversal candle played out. Bearish to the 200-day. I won't be surprised to see if the orange gap gets hit. Tekla, earnings were good. Stock was up 3.7%, 2202. Black candle, bearish. Intel, don't care. JP Morgan, not a black candle, but it is stuck around resistance. KKR up 1%, but these look vulnerable into March. Kinder Morgan, black candle. And Netflix up 1.3%, but I mean, really, that could just be another baby bear flag. Nike, 1.1%. NVDA up 1.6. That is a black candle. Bearish for Thursday. If a 200-day gets taken out at any point, currently 172 and rising, then we're going to go down to 150, as looks probable. Ondas, solid gains. Wow, look at that, 10% gains. Wow. Pan American Silver had earnings in after hours. I don't know what they were, but I'm sure they were fine. 3.5%. Short-term vulnerable. Palantir, 1.8%. Black candle, black spiky candle at the 10 MA. Yep. Below 126, target is $100 as looks realistic late March. Transocean, 1.3%. It's black candle. Earnings are due Thursday after hours. I'm sure they'll be lousy. Rocket Lab, 6%. SMR, subdued. Target, yesterday's black candle played out. Tesla at 0.2%. Not a black candle, but this one looks vulnerable to red gap in March. Take two, 2.7%. You know, it's had a few bounces recently, but they never last. UPS lower. Actually, UPS was down, but it did turn up into the close, up 0.5%, but it's below the 10 MA. I lean at net bearish UPS. Exxon, solid gains of 3% because of oil. And actually, before I forget, let's take a look at oil. So for the day, officially oil was up $3.02, 4.8%. Powerful candle, strongest candle in arguably since last June. Yeah. You could argue structure is a multi-week bull flag. You can see on here, threshold or resistance is 67-ish, then $70, and then 76 on a weekly chart. Multi-week structure is a bull flag. This week's candle is bullish engulfing. In theory, you can kind of extrapolate that we're going to go up to at least 75, 78. Yep, yep. And finally, on a monthly chart, we're only fractionally higher on a month, but I would note, wow, it's happened. It's happened because of today. So because we're up today, momentum has finally turned positive for the first time since August of August 2022. We have not seen oil turn have positive monthly momentum since August 22, right? Note the Bollinger on the monthly chart, 77. Isn't that? I find that interesting. So we're at 65. Soft target is 77. You have 78, 79. So there's a lot of resistance around here. So, but this is a natural. So we have upside of $12. $12 is about what? 18%? Yeah, 18, 19% upside. Yeah, I like that a lot. I'm considering getting involved in this trade after the State of the Union address next Wednesday morning. All right, so next, silver, gold. Let's start with gold, commodity gold. Commodity gold, $101, 2.1%. So we're at 49.80. You can argue structure is a bull flag. Daily momentum remains negative. On a weekly chart, it's not great. Still rolling over. Silver. Start with commodity silver. Officially for the day, silver was up $3.67, 5%, which negates most of yesterday's drop. Bit of a mess. 77.21. Momentum is still weakening. On a weekly chart, we're still net lower for a fourth week. Momentum is still due to turn negative next week as of Monday. This is a very serious problem to anyone trying to go long, right? We're still printing, we're still grinding down. It's not good. Now looking at SLV on a daily because sometimes you get different candle types. So we opened at 69.66, closed at 70.09. We missed out on a black candle by about 50 odd cents, right? So we did have one in the mid afternoon when the equities were calling back. We did briefly have a black candle, but it looks like silver might open up tomorrow morning with equities, but then probably roll over again. I mean, the issue here is 65 a kilo? I don't think so. There's no reason to assume that now. again on a weekly chart, you can see. I mean, on a weekly chart, we're actually up for the week, but only 0.5%. And look at this. This is not good. This is a problem. This is a problem to anyone who wants to go long. Now, what else is there? Wasn't planning to look at bond yields, but why not? They're kind of heading down, right? Broadly, of course, they're still going up. Um, where do we want to end? Let's end with a weekly chart and a monthly chart. Weekly chart. So we're currently net high for the week by 0.7%. But the fact that we have taken out this low, 67.89, we're still. You can see that this is very important. How we settle this week's going to be important. The bears just need us to settle under the 10 MA, 6900. Anything under the 10 MA is okay. If you're bullish, you want to see the market break above 6903. You really need that. But that looks difficult this side of OPEX. I don't think OPEX. My guess for OPEX is that we'll settle the week around 68.50. So I think maybe we open up tomorrow morning 20 points or so, and then we reverse and we come down to maybe 68.50, maybe even 6800 briefly, but then pin the market at 68.50 on Friday. And note the lower Bollinger, 6600. I think that's possible not next week, but probably the following week, early March. First week of March, I think we'll be 6,600. If I'm right, there's a short side trade here to be done. I'm trying to do that now. So I did one trade today. I'm going to try another one tomorrow, and then probably wait until after the State of the Union. That ain't bearish, right? I mean, correction, that ain't bullish, is it? We've been leaning weak. We've been cooling back. In terms of momentum, we maxed out in late October, and we've been slowly weakening ever since, much like this. Isn't that interesting? You could even argue that little dip there, right? That little dip there in November is analogous to January. Plenty of downside in the March, April, realistically. And I will end with S&P on a monthly, specifically. This is not bullish. Momentum is weakening, and when it turns if it turns negative, if it might not, but if it does, the last time it turned negative was April. Look at that ugly drop. So what we're looking for in March, not February, we're looking for March candle to be like that, getting down to the 10 MA and breaking under it. We break under that, you could argue we have a chance at coming down to test the lower Bollinger. And very, 5,500 would be crazy, but it's possible. We are weakening. That's bearish. That's a problem. Again, clearly we haven't settled the month, but yeah. I mean, the most bearish monthly settlement would be if we close under 65.95 for 10 MA. That will not be easy. It doesn't look very much on the chart, but that will not be easy. You're gonna need arguably serious upset next week to get down to that. Also, you need to close under it. And the lower we cook, if we start cooling back, that MA is going to drop. So it gets even harder to get to reach that level. Anyway, 7 trading days left of the month. In theory, we should be net low for the month. I would be somewhat bemused if we I would be I would be very bemused. This looks like this looks like a pretty secure short midterm high, 7,002. I think we're going to be going above that now for a while. But yeah, Iran would be a concern and would be the excuse to drop. Just trying to think if there's anything else. I mean, some interesting earnings in after hours. DoorDash, Kavana, Kavana getting obliterated. The market not buying into the earnings, which were mixed. Anyway, I wish you a good evening, and see what kind of Thursday open. In theory, I think we should open up, which would make for a another reshort, at least to me. Be good.